want to talk about something that a lot of buyers are kind of turning a blind eye to right now. But mortgage rates are at a 3-year low dating back to 2022. And this is something that's becoming very, very interesting to me. And I hope that I can educate many that are still kind of on the fence or they've just kind of checked out because of mortgage rates going up so abruptly high in the last couple of years from where they were back in 2020 or 2021. A lot of people feel like they missed the boat back then, and now rates are so high, their spending power has just gone out the window. Well, I'm here to tell you right now that very quietly, spending power is starting to come back. And as mortgage rates continue to make their way down from their high of 8% back in October of 2023, just 2 years ago, we're now sitting at 6.1%. So almost two full basis points below our local high. What does that do for spending power? Well, that's what we're going to be exploring in today's video and applying these metrics to the Bend and Central Oregon markets because while it did seem like doom and gloom for a lot of people that missed the boat back in 2021, that boat is coming back to the harbor and it's presenting itself as a great opportunity for anybody paying any inkling of attention to the real estate market right now in the local Bend and Central Oregon area. So if a video like this sounds like it's for you, exploring what real spending power is right now and how it's really changed over the last 6 to 12 months and where it could be going in the future, stick around. We're jumping into it right now. Okay, so I've got my screen share on right now. We're looking at this article, and to me, it's very, very telling. Most would-be buyers have kind of checked out, or maybe they're sort of looking, they're just kind of dipping their toes in the water, but they don't really understand what's going on right now. Ben has had a surplus of inventory in 2025, the highest inventory since 2012. Okay, we're talking about 5 months of inventory. There's been so many homes sitting on the market. Think about where inventory was in the Bend and Central Oregon area back in 2020 and 2021. We were at less than 1 month for literally over 12 months at a time. It was insane just how quickly real estate was getting put on the market and then taken off the market by a purchase in just a short amount of time. We had 2 weeks of inventory for a very long stint as well. So now we're sitting at 5+ months while interest rates are coming down. If we look back at, say, where we were at 2 years ago, 8%, it's been remarkable how they've slowly come down. They've grinded down. Very unnoticeable because they're just not making headlines like the abrupt increase we had from 3 years ago. But if you look at this article here, mortgage rates drop to near 3-year low opening door for home buyers, but few are walking through. Maybe they got the PTSD, maybe they're just checked out, maybe they're waiting for some magic interest rate of 3.5% or 4% or 4.5% again. That's probably not coming anytime soon, but what we can expect maybe is 6%, maybe a high 5%, but don't count on anything. Take advantage of what's in front of you right now because I want to talk about spending power right now and the fact that there is a huge opportunity for any buyer in the market based off of the volume and exhaustion of inventory and those sellers just getting worn out. They want to move off of their home. Some of them don't have to. They'll wait, they'll take it off and then put it back on some other time. But many, you just got to find them. Many are literally just exhausted. They just want to get out of it and move on with their life. And they're just waiting for somebody to give them a reasonable offer. And their definition of reasonable has changed dramatically over the last 6 to 12 to 18 months. So the best advice I can give for anybody that dreams of owning a home today that doesn't is just go check it out and see if you can get qualified if you haven't done so yet, and then just start exploring the real estate market. You never know what kind of rock or stone you can uncover that could just be full of opportunity for you. It's pretty interesting right now for those that are choosing to be in the market. But let's take a look at this. A home buyer on a $3,000 a month budget, meaning you can allocate $3,000 of your hard-earned dollars into your mortgage or your rent on a monthly basis, has now gained $26,000 in spending power as mortgage rates have dropped to near 6% dating back to where they were at the beginning of the year. So if we continue on, gaining $26,000 in spending power, that is pretty remarkable to me. And it continues. A home buyer on a $3,000 budget monthly can now afford a $473,750 home in today's mortgage rate world based off of where we were and compare it to where we were just a year ago at 447. So they've added $26,000 in spending power in a year. Now, if we were to scale back even further, 2 years, I'll tell you what, it's a very interesting time. We go over here to ChatGPT, we just type in this little prompt here: mortgage rates one. What were mortgage rates 5 years ago, 4 years ago, three, two, one? I mean, it's very, very interesting to see where we've gone, but the spending power aspect of everything is just all predicated on mortgage rate. And so if we look at this, 5 years ago we were at 3.1%, 4 years ago we were at 2.96. Watch how they abruptly go up. And it's pretty darn interesting. And so it doesn't really tell the whole story as to where our local peak was, but our local peak was actually roughly 8% in October of 2023. If you don't believe me, go look it up. But here is where things get super interesting, is if we use this little table down here and we start to really apply ourselves. Let's say that you can afford $3,500 a month for your mortgage. If we were to go find that 8% back in 2023 of October, what we're going to notice is that our spending power would have been capped at 477,500. That's assuming that you're doing a 20% down, 30-year fixed mortgage at 8%, 1.25% property tax rate, all the standard type of expenses associated with a home. And we're also including, oh, no HOAs in this exercise. So let's go back there. 8% would have given us 477,500 in terms of spending power. Now alter that to today. 2 years later, we're at 6.1%. Let's go find it. It's going to give us 555,000 in terms of an increase in spending power. Let's apply that to Bend real quick. If you've been watching these videos, you understand where kind of the median home price is at in Bend. It's roughly 700 to 750 any given month. And so it's significantly higher than what we're talking about in terms of the numbers here for somebody who can afford a $3,500 a month mortgage. So, but a huge difference between, say, 477 and now 555. Let's head over to our local MLS and just play a quick game. Let's pretend now you're looking for a home in the Bend area. So we'll type that in. We're looking for a single family home or maybe a townhouse. Plentiful amounts of those available right now, but we don't want to mess with anything other than $477,000 because frankly, that's what the market dictated that we could afford just 2 years ago. That was designed to slow down the market. Well, if we actually apply these metrics, pretending that we now are able to go buy a home for up to 477 based off an 8% interest rate from 2 years ago, what do we have? We have literally 16 homes available for sale in the Bend market right now. That is just astonishingly low, right? If you look at them, most of them are going to be townhomes. They're under construction. We're talking 1,400 square feet. There's just not a lot of wiggle room here as it applies to where interest rates were dating back to just 2 years ago. But what I want to really show you now is the significant difference in spending power alone, just based off of percentage points of two, say, mortgage rates going from 8% down to 6% in such a short amount of time. So we will go back to the search and we are going to apply the new price point because our spending power has gone up. Let's pretend it's going to be $560 because we're able to negotiate at the very minimum $5,000 off. We could probably do a significant amount more based off of where things are at with the current state of the market. But let's pretend. Right now, we've got 94 homes that are in the Bend market, the exact same parameters as before, that are available for sale for $560,000 or below. We're going to go now to price and we're going to descend it and we're going to take a look at these. This is what is interesting about mortgage rates coming down. A lot of people think that it's just not that big of a deal, but it is. It really opens up a lot of opportunity for people, especially those that are looking to break into home ownership for the first time, those that are looking to maybe downsize, those that are looking for a second home of some sort or a vacation home. It really opens up a significant amount of opportunity. You can see we've got homes as high as 560 or just under 560, and they are beautiful homes. I mean, we've got single family homes. There's two-story, there's two-level, there's one-level. You got townhomes, and they're basically scattered all around Bend. And before, we were very limited as to what we could really offer based off of interest rates. But now you can see here that things have really changed based off of spending power going up for many, many people. And that is ultimately what we're trying to drive home. But, one thing is for sure is that most of the homes are going to be on the east side because that's just frankly the difference in the east side of Bend versus the west side of Bend. But this is the goal. Now, what if we applied this exact same thing to Redmond? There's a lot of people that are looking to make a purchase in Central Oregon. They don't necessarily want to live in Bend, but they want to live in Central Oregon. Maybe Redmond's the right fit for them. Let's pretend now that you have the ability to spend $3,000 a month on your mortgage. Well, let's go over to this little chart here and find that 8%. Okay, back in 2023, about 410,000 was going to be your cap with an 8% interest rate. Now, if we go up to 6.1%, where are we at here? 475,000, 476,000. So a $65,000 increase in spending power over a 2-year period of time. How does that apply to the Redmond market? Well, let's go take a look and see if we can figure out just what kind of opportunity is presenting itself in front of us today. So we'll head over to Redmond right now. We're going to type in Redmond, and we will get rid of Bend for the sake of this exercise. And let's just draw this thing up. 475,000. Okay, we have 71 different homes that are available for purchase in the Redmond area right now based off of a $475,000 maximum price, and that is predicated on your spending power of, say, $3,000 a month dedicated towards your mortgage. If we were to go back to 2023, 2 years ago, and apply our spending power max at $410,000 based off of 8% mortgage rates, well, you're going to see a significant reduction in what's available to purchase. Just based off of mortgage rates. So mortgage rates really do matter. It really alters your monthly payment. It's really going to alter what you're able to really consider and maybe make an offer on. But I just want to drive this point home because right now is a very interesting time for many buyers that are opting to participate in the real estate market as we progress through the end of 2025. You can see this list here. There are very plentiful amounts of homes available right now. Single family homes, townhomes, they've got sizes that could probably fit many different living situations. And that is something that really needs to be taken into consideration. You get homes that are up to 2,000 square feet right now that are on the market and that are available. And something along these lines would not have been available back in 2023 when mortgage rates were higher than they are today. Mortgage rates continue to come down. But what is very telling is that inventory is at its high. And it's a high that a lot of people have not experienced as owners of property in the last 5 to 10 years. Many of these people that bought back in 2020 or 2021 were first-time homeowners, and so they don't know any other market. They don't know a market where inventory is so high, and all of a sudden now they're competing with all these other homes that are for sale. What do? They don't know what to do. They're learning as they go too. But if you're the buyer right now, what you can guarantee for yourself is that you have a significantly higher volume of spending power. You have a lot of cards on your side of the table because you can go look at many homes. You can sleep on the home overnight. You can sleep on it for a week. You can just circle back. You can circle back. You don't have to make an offer the day that you see it. You have the leverage right now, but you're also getting the market coming into your favor more and more as time goes on. But if you wait significantly long enough to the point where all the other masses that are on the sideline, those people that are sitting there waiting for that perfect moment, they wake up and they realize, okay, now is a good time for me too. Well, you're creating more competition as buyers. So, there's a fine line. And that's something I want to drive home. But what today's video was dedicated to was simply trying to help you understand that there is an opportunity and that things are getting better, spending power is increasing, and those that are in the market right now are really taking advantage. If you want to know if you are in a position where you could do something like this, please reach out to me. If you don't have a lender yet, I can help you find a great lender here locally. If you already have a lender, great, reach out to me. We'd love to help you with that next purchase. My name is Ryan. I am a licensed broker with eXp Realty here in the state of Oregon. And this is what I love to do, helping people figure out their living situation pertaining to purchasing a home. So when it's your time to reach out, please do. It starts with you guys, though. You can call or text, and we can figure out what the next course of action should be. Thanks for watching, and we'll see you on the next video.